Delta Airline shares slightly higher today. Here's one headline. The numbers, the latest quarter, were better than feared. Okay, so the stock's rallying about 6%, but it has dropped almost 40% so far this year. And the CEO is withdrawing a full year forecast, warning of stalled growth driven by broad economic uncertainty. Let's get more from Tom Fitzgerald, airline analyst at TD Cowen. Thanks very much. Lots of moving parts. Really appreciate your joining us. Talk about the latest quarter, though. Better than feared. I love that expression.
Yeah, March came in a little bit above expectations, and Delta was still able to benefit from strength in premium, strength in long-haul international, and strength in loyalty. So some of their more diverse, higher margin revenue streams came in, and they're still able to eke out an operating profit this quarter.
What do you mean by strength in loyalty? What kind of business are you referring to there?
So that's, if you think about the credit card swipes, for example, if you have a co-branded credit card, every time you're, using that at a grocery store or a restaurant or general consumption, Delta is selling miles to whether it's American Express or other non-airline partners. So that's another revenue stream for them that's different, that's distinct from just the general selling tickets and transporting people from A to B.
Oh, so they actually make money that way from the cards. It's not just a loyalty building thing among the customers, for example.
Correct, and that's a substantial portion of operating income for the global full-service carriers.
What's distinctive about Delta? We know they're gigantic, but is most of their business still domestic?
They have a nice mix of domestic and international. They have a very robust long-haul international network across the Atlantic, Pacific, and Latin America. They have investors are pretty fond of their fleet management profile, where they have a barbell approach between, a lot of young, new tech aircraft, but then also like a large stable of older generation aircraft that give them a lot of optionality in an environment like this, where you can keep those older aircraft in service longer if demand merits it, but you can also start to park and retire those aircraft and save on the maintenance spend for keeping them running if demand starts to tail off, which is what's happening now.
And you think in a challenged industry, as you put it, Delta looks like a port in the storm, partly because they had the diverse revenue stream, but also a decent balance sheet?
Yes, very healthy balance sheet. Gross leverage is around 2.6 times. Net leverage is even lower. They have over $30 billion in unencumbered assets, and that unencumbered asset base is growing. So, airlines is going to be a challenging sector in a downturn, no matter how you slice it. But we think Delta is definitely better positioned than many others in the peer group.
Now, I'm seeing one headline on Bloomberg that Delta says it has told Airbus it won't pay tariffs on new aircraft. I haven't read the full story yet, but that's kind of interesting. If tariffs did go on European-made airplanes, that would hike costs, presumably, for carriers that bought them.
Yeah, that's going to be a tricky one to see how that plays out. A lot of aircraft that are already on order, there's a contract agreement with agreed upon escalations in the contract, depending on how inflation pans out between signing the contract and then actually taking delivery of the plane. So we would expect the tariff issue to be rear its head more in negotiations on new orders. And I think it's hard to. There's just such a lack of clarity on whether, how long these tariffs are going to be with us and any type of negotiation down on the bilateral side. So I think that makes it really tough in terms of negotiating price on new orders.
It's fascinating. Yeah, they say, quote, the executive said on the call, the one thing you need to know we're very clear on is we'll not be paying tariffs on any aircraft deliveries we take. But you can see where that would be a sore point. What about the outlook for U.S. domestic travel? Have you any thoughts on that? I mean, if we do get a U.S. slowdown, obviously that's not great for demand.
It's going to be challenging. We think it's the biggest risk for the domestic low-cost carriers because we expect the Delta and other legacies like United and American to compete more aggressively for main cabin traffic. We think they'll discount pretty aggressively to keep people to protect share and maintain load factors where they want. So there's going to be less spill traffic, all else equal, for the leisure carriers to attract late in the booking curve.
Can you remind me, it used to be, I think, and maybe I'm wrong on this, that a huge amount of carriers' profits was provided by first-class business premium seating. And of course, the main cabin, they want to fill those up, but it wasn't nearly as profitable. Is that still the case? Do airlines rely on the premium seats for a lot of their earnings?
Yeah, I would say that premium seating has been a winner, especially premium economy tends to be great bang for your buck on a revenue per square footage metric. But in addition to premium, long haul international across the board has been really attractive. The credit card sales we talked about earlier, that's also been a big part of the profit margins, and that's why we like the bigger airlines, is because they have, they're not just reliant on main cabin domestic leisure. They have a lot of different revenue streams to benefit from.
And you're sticking with a buy on Delta. You're not throwing in the towel here, even though they're yanking their forecast for the year.
We are. It's a challenging environment for the sector, but we still prefer, Delta's one of our top picks along with United and Alaska, and we think those carriers are still better positioned relative to the peer group.
Thank you very much, Tom. We better jump. Really appreciate it.
Thanks, Andy.
Tom Fitzgerald, airline analyst at TD